Good evening. Today is Monday, the 6th. Let's look at crude oil. Last week on the 1st, actually, crude, after the inventory level was announced on the 1st of October, took a sharp decline. Actually, the inventory levels showed surplus. Um, about 200, 300,000 barrels more than forecasted. That shouldn't have been the reason why it uh, should have gone down below the 6140 levels. But apparently, I think the weekend and the geopolitics also would have added some pressure on the glut-like situation prevailing. Stabilized on Friday and showed a sharp increase over the night yesterday, early morning. And today's early morning trades in the MCX crude suggested that there would be a rebound, but it fizzled out. In fact, it went up to, I think about, it went up to 5,540, 530 in the morning, and then kind of came down gradually. Now it's kind of trying to make up its mind whether to go up or not. As things stand, I think there's a strong support at the 60-61 dollar level. Unless it comes down below 60 and breaks this level of 59.31 on of 3rd June, then there could be a retracement all the way to 55, 54, 55 dollars. So that would be a bit of a shocker. Um, there is no, obviously, OPEC has not indicated any increase in production and stuff like that. They are maintaining the same uh, small increase of 137,000 barrels per day, which they had announced last year, in fact. So they are maintaining that, and no one is in the mood to really increase supplies because the pressure on the price is quite a bit. For people trading in India, I think we need to be careful. Uh, while there could be there could be a movement towards 5,500 levels or even beyond, but I really do not see any rally kind of sustaining beyond 5,550 levels. Um, so it is, I would suggest, and I would think it is a sell on rise kind of a scenario. So look at support levels and then you may want to short. With regards to natural gas, it's a little different. In fact, uh, on 2nd of October, it touched um, 3.70 levels, which was the previous high on the previous cycle. So the expectation was that it will reverse and follow a similar pattern. But it coincided with the inventory data which came out last Thursday. That um, um, it showed a sharp. It post that on Friday it has actually taken an upswing. For the weekend, it has taken an upswing. The storage data is nothing too far from the ordinary. It is 53 billion cubic feet of storage on the EIA as against 66. So basically, it is little short, but it's not that short to affect supplies, one would think. But it is showing mixed signals, and it was very bullish in the morning today. MCX level, it actually kind of, if you look at the 15-minute chart, really rocketed in the morning. It opened high, then it rocketed in the morning to 309 levels, which was like little on the same page as what happened on in October of this year. So there has been a pretty much a lull in the natural gas demand, and now suddenly it has even broken today's low, but I think it's recovering. So we had said that anything over 280 to 85 levels, 285 levels is a buy. In fact, I would revise it to 295. If the prices are about the 285 mark, I think it is a buy on dips. And why I'm saying that also is the on the MCX, the 20 October contract is at 303 currently, while the November contract is 362, which is like nearly 60 points away. It is unprecedented. That means the traders are expecting, as we go into winter, a short supply of natural gas, and they're building up. And if the inventory doesn't build up, then it adds to everyone's worries, as we saw last year with this Russia-Ukraine war. So generally, I think it has to be an increase from here on in the next 2 3 months. So it will be slowly a buy on dip. One needs to proceed cautiously, and I think we'll have to follow the levels that I mentioned. Thank you. Happy trading.